Story of a New Beginning, heard daily on Bible School Radio 91.3 KDKR Decatur, Dallas, Fort Worth, and on 91.3 KYJC Commerce.
Portions of KDKR programming do not necessarily reflect the views of this station, its management, or staff.
Prudent Money with Bob Brooks is sponsored by the Prudent Money Foundation on 91.3.
Well, are you with the right advisor? Today we're going to take a look. Stay tuned for Prudent Money. Bob Brooks, and you are listening to the Prudent Money Radio Show. Thank you so much for joining me today. You know I do appreciate it. I do have a line open if you'd like to call in and ask a question. The number to call is 1-877-913-5357. 1-877-913-5357. You can also go to the website at www.prudentmoney.com. Send a question in to the Ask Bob section, and we'll get that taken care of for you. That's all at the website, prudentmoney.com. 1-877-913-5357. Well, a pretty rough day today on Wall Street, and I think what's happening is the reality of a potential recession, the reality of a lot of things that are not too positive that are happening around the markets are starting to come into clear vision of Wall Street. Dow Jones Industrial Average was down close to nearly 700 points today. Now, obviously, that sounds a lot worse than it is. The number of points have got to be bigger because it's a bigger number. It comes out to about negative 2%. Still, nonetheless, that is even for this bear market, not a very good day on Wall Street. S&P 500 was down 2% as well. The NASDAQ, of course, was down more. It was down 2.5%. The day started off with Home Depot and Walmart coming out with their earnings reports and saying, hey, we don't see a very positive pathway forward and a definite slowdown in consumer spending. Now, that wasn't what they said. That was my version of what they said, just to make sure we're all clear. And I think that we're starting to see, as I've talked about in the past, is the consumer starting to pull back a little bit. And I'm always having a lot of conversations, talking to people, and I always like to ask the question, how are you dealing with inflation? And I'm hearing more and more of the same story. It's getting to where I can't deal with inflation, and I'm looking for other places to cut back. I can't find places to cut back. And keep in mind that a recession is measured by the amount of consumer spending that occurs. So the economy to grow depends on that growth depends on consumer spending. So you can tell that is really the case. And if we get around to it, we'll look at some fresh new debt numbers today that also don't paint the recovery picture that the White House would love for you to believe. The bottom line is this. If I had to simplify it, it's, kind of what we thought was going to happen is happening, is that the economy is deteriorating little bit by little bit. It kind of reminds me, and I get these bad flashbacks, I'm sure you're the same way, of the ice storm in 2021. When that thing started out, I think people were a little bit excited because they thought, well, this will be a situation where, we're all kind of locked in the house. There's something nice about being snowbound, I guess is what you would call it, to where you enjoy your family, you're in the house, you don't really go anyplace, but you got the heater on, everything is nice and toasty inside. It's kind of a day off where everything shuts down. So as it started to snow and the temperature started to drop, you started to get an idea that, hey, this is not going to be good. And then when the first round of electricity goes off and it starts to become about 40 degrees in your house, you know it's not going to be too good. And then when you think that the electricity problem is going to get solved, you find out it's rolling and it's going to be off for 8 hours, on for 2 hours, and it just really goes downhill from there. It's kind of what I feel like with the economy right now. Is we're starting to see it snow. We're starting to see the weather drop. It's here. And of course, the White House, politicians, Wall Street all want you to believe that there's absolutely no way that we're going to have a recession. Whereas the Treasury Secretary, Janet Yellen, is a very smart lady. If you ever look at her background, she's very well educated, went to all the right schools, does not think we're going to go into a recession. Maybe they're completely right and I'm completely wrong. I reserve the right to be wrong. It's just that when you look at the one fact, almost, if we're going to call it the closest thing to a fact, remember it's an opinion, and my opinion is that interest rates have to go a whole lot higher in order to slow down this economy and slow down inflation. And that's just really the reality of it. And unfortunately, I think we're starting to see it. This is Bob Brooks, and you are listening to the Prudent Money Radio Show. Thank you so much for joining me today. You know I do appreciate it. If you have a question for me, you can always go to the website at www.prudentmoney.com. Send a question in, and I will get that question taken care of for you. That's all at the website, www.prudentmoney.com. Well, let's talk a little bit about the other side of the story. You know that if you've been listening to Prudent Money for a long time, you know I talk about the other side of the story. That's what I'm committed to, so I can tell you a different interpretation of a story. Then you can take that, compare both sides, and come up with your own realization of what you think is, your own opinions that you think is happening. And I love to do these segments on commercials that I hear, especially on the radio. Very aggressive financial advisory firm has been pretty aggressively advertising in a local campaign. And so we need to bring some other side of the story to it and talk a little bit about what's happening. And this is not going to be word for word, but you'll get the idea, because I wasn't obviously driving and writing it down. The commercial starts off with stocks are on sale. If you want to get something on sale right now, stocks are a great buy. And you know everybody's heard that saying that when it comes to stocks, sell high and buy low. And this is definitely the time to buy because stocks are at their lows. Well, that could be the truth. That could be the fact. Only time's going to tell if that's right or not. But the spokesperson or the advisor, whomever it was, says, I can't guarantee anything except for one thing. Now, there's where we go wrong right there. Because as a financial advisor, there is nothing that I can guarantee. And there's a set of regulations that would back that up, that there is nothing that I can guarantee. So the spokesperson or whomever it was goes on and says, you should always buy stocks when they are low. And today, stocks are on sale because they're so low. There's a few things worth noting. Number one, once again, the commercial show stops right at the point that the spokesperson said, as an advisor, I can't guarantee anything except one thing. But realistically, you can't guarantee anything. But here's the problem. And I saw this as a good example was the financial crisis of 2008, where people were coming out on Wall Street, on CNBC, and saying that stocks are a great buy. You want stocks to fall further because they go on sale and you get them at a lower price. Well, the question that I have is are they still a good buy if they're going to lose an additional 30% more in value? So if I was going to buy Apple today, because I thought Apple stock has lost some of its a good bit of its, not a good bit, some of its value. And that's the other thing too. I'll get to that in a minute. But they talk about buying Apple stock, and I'm thinking, well, maybe I should buy some because it's at a low. Well, it's at a low as compared to the top of where the highest level that it's gone, but is it the low of at the low of the cycle? Remember, I always talk about how things go in cycles, and we are in a bear market cycle right now. And at some point, stocks will go as low as they're going to go, and it will start to turn back up again, and it will be a great time to buy stocks in the market. But would you want to buy Apple stock if Apple stock was about to lose 40 or 50%? So you got to be careful about the aggressive commercials. That there's another side of the story to that. Now, one would argue that, well, you don't have a crystal ball. You can't say that stocks are going to go a lot lower. It is simply my opinion based on what has happened in history and what bear market cycles have done in history. And the other opinion is that, well, actually, this is, you can measure it. It's actually fact that we had such a big bull market cycle that more than likely, opinion, the bear market cycle will look a lot like the bull market cycle, except it will be going down. So is it a good time to buy stocks? I personally wouldn't. I would do something else. 1-877-913-5357. This is Bob Brooks. Stick around. I'll be right back.
The Word for Today is excited to announce the new official online home for the ministry of Pastor Chuck Smith and Kay Smith, pastorchuck.org. At pastorchuck.org, you'll have instant access to thousands of hours of verse-by-verse teaching by Pastor Chuck Smith from Genesis through Revelation, and full access to special messages on subjects such as prophecy and much, much more. Also at pastorchuck.org, a full library of great teachings by Kay Smith, and a section where you can read some of Pastor Chuck's books online, all free of charge. So visit the new official online home of the Word for Today and the ministry of Pastor Chuck and Kay Smith, pastorchuck.org.
Worthy are you to take the scroll and to open its seals, for you were slain, and by your blood you ransomed people for God, from every tribe and language and people and nation, and you have made them a kingdom and priests to our God, and they shall reign on the earth. Please join us 1 p.m. Saturday and 7 a.m. Sunday with Pastor Jason Wallace for the hope that awaits us as believers.
When the storms of life surround us, it's easy to despair, to feel helpless, to struggle, or just withdraw. But Wednesday on The Verdict, we're learning powerful lessons from the example of Jesus as Pastor John Monroe takes us through the dark hours before the cross. Even in the darkness, we can find purpose and hope. Don't miss Wednesday on The Verdict.
The Verdict, weekday mornings at 10:30, here on Bible School Radio, KDKR.
Welcome back. This is Bob Brooks, and you are listening to the Prudent Money Radio Show. 1-877-913-5357. I do have a line open. Would love to hear from you today, whatever is on your mind. One of the other things that was interesting about the commercial that I thought was actually something that was valid to talk about, and that was, are you with the right advisor? You know, being with an advisor over the past 10 years has made your advisor look pretty good. I mean, the market's gone up, and people who have made money and that kind of thing. Now, when the market has gone down like it has, and one of the things I was going to mention too is that, our prices of stocks really on sale. Because if you look where the market started at the top, January 2nd, 2022, and where they are today, I don't even believe that the S&P 500, which I always refer to as the stock market, is even down below 20%. I haven't calculated it in a while. So I wouldn't really call stocks to be on sale. It's, in fact, today, by the way, if you would like a copy of this, I'm going to open it up to send you a copy of this if you send me an email at info@prudentmoney.com. One of the things I go through in my client letter, which I wrote today and will be sending out this afternoon, and you're welcome to see a copy of it if you'd like. Just send me an email at bob@prudentmoney.com or info@prudentmoney.com, and I will send you a copy of it. But I talk a little bit about some things that you really won't hear in the media, and they're indicators that show that this bear market may have quite a bit more to go. So I spell all that out. It's very easy to understand, especially easy to understand when I do it in graphs and pictures. So if you want a copy of that, make sure that you send an email to info@prudentmoney.com or bob@prudentmoney.com, and I will send you a copy, as they say, hot off the press. But today is where your advisor really earns their pay. How they react to the market going down speaks volumes. Now, here's the thing, is that I'm not going to sit here and bash buy and hold investing. I just believe that you need to have a strategy for whatever type of market that we're in, and buy and hold is not maybe the best choice for investing in a bear market. And I'm not by any stretch bashing the advisors or criticizing the advisors who follow that. I mean, it's like anything else. It's a philosophy that some believe in, while others believe in a different philosophy. It's a philosophy that says long-term investing is the way to go. So don't look at what's happening on the short term. Look what's happening at the long term. And the long term would say that the market always goes up. Now, if you look at a chart of 60, 65, 70 years, pretty much supports that. But if you break it down into little segments, you'll see, just like in the financial crisis, by the time the low of the bear market was in, which was 2009, the stock market was at the same level it was at, I think it was in 1998. I mean, that's an enormous amount of time to come back from. But there's the downside to buy and hold investing, is that you have to ride the roller coaster and make sure that you're allocated properly. Now, one of the things I do agree with buy and hold investing is changing the allocations, which I think is kind of universal across all types of investing philosophies that people have. What I mean changing the allocations is change the allocations to more going into cash, or more going into bonds, or more going into stocks, whatever you feel like the right allocation is, the portion that should go to different investments. I personally believe that alternative investments make the most sense, but I'll get to that in a second. The problem with changing the allocations is that usually works, because bonds typically don't go down when stocks go down. But today, I'll give you a great example. Bonds were hit pretty hard, pretty big losses today, along with stocks. And therein lies the problem. Interest rates, remember, there's an inverse relationship with interest rates and the stock prices. As interest rates go up, stock prices go down. As stock prices go up, interest rates go down. Of course, we've been seeing interest rates fall for a very, very long time, and now they are starting on their way up. And they took a little bit of a breather, I think, for 4 or 5 months, and then over the past 2 to 3 weeks, they've been going up, and they seem to be going up with a vengeance. And that therein lies the problem. But so buy and hold investing, and depending on how your advisor is managing that approach, says a lot about what's going to happen when the market turns into a bear market. Remember, everything cycles. We go through cycles. As an investor, you will go through a bear market cycle a certain number of times in your investment lifetime, because that's what markets do. They travel in cycles. So I have a very simple idea and the simple way to look at it versus buy and hold investing. If everything is going down in price, why don't you use an investment strategy that is designed to go up when the market goes down? Obviously, it's a lot easier than said to pull off, but it is a strategy and is a way to invest money. Why stay invested in investments that are only going to benefit from a market that's going up when the market is going down? So that's one of the things that you'll see pretty quick, is that how your advisor handles bear markets and what they do in turn. And so it's very worth watching to make sure that clicks with you, and make sure that you're feel comfortable and at peace at where you are with your advisor. I would suggest that right now is a good time to make sure you check that box, because it could be a long ride at this point. This is Bob Brooks, and you are listening to the Prudent Money Radio Show. Thank you so much for joining me today. You know I do appreciate it. 1-877-913-5357. You also want to make sure that your advisor has a process that you go through. I've taken my process and redid it a little bit, and I call it the 5 phases of prudent money. The first phase is, and I think every financial strategy, financial plan starts out with what I call value planning. And value planning is simply this: discovering what is the most important thing to you about money and making sure that you are getting your highest value. So it could be that your highest value is in retirement is the ability to not earn income so you can go and serve and work in ministry. Maybe it's freedom. Maybe it's a stress-free life. Whatever it is, what do you value the most? And then you put a model together that says, if I save this amount of money and I invest and I earn this amount of money, then I will be able to hit my goal, which will allow me to live my values. The second phase is monitoring to make sure that you are staying on track. That's one of the great things about having a model put together, is that it's based on your values, based on your goals, and you can tell if you are on track. One of the things I always like to ask people, are you on track to retire as you would like, based on your values? You should know what that number is, if I'm on track or not. The third, and could be the most important, is risk management. And this is the one area that I believe every advisor should be focusing on right now, is, am I effectively managing risk for my clients and making sure that they're going to make it through this without it sustaining big losses. Risk management also looks at other issues that could get in the way of your values, and that could be a lot of different things. The fourth phase, is having an income strategy, because at some point you need to convert from a growth phase to winding down to an income strategy. And then number 5 is legacy. Where's your money going to go when you pass? 'Cause we're all going to pass. So where's your money going to go? And you have a legacy plan. And the legacy, the whole idea of the legacy plan is, I love that one. It's actually a lot of fun to put together and develop and make sure that things go like you want them to. Hey, this is Bob Brooks. If you got a question for me, please go to the website at prudentmoney.com and send it in, because we are all out of time. Till we do meet again next time. Keep the faith and have a great rest of the day.
That's all the time we have for today. Questions or comments for Bob, or to find out more great information like what you've just heard, visit www.prudentmoney.com. Be sure to join Bob Brooks again for the next edition of Prudent Money.